Well, welcome everybody. Steven Sitkowski here. This is my Building Wealth weekly podcast. This thing's picking up a lot of traction. We posted it on Facebook, got 85,000 views. So I think we're approaching a million views a month. So I'll keep doing it. Thanks for watching. We have a bunch of good news today. That's always fun, when you can share good news with folks and good news about the markets, geopolitical events, just kind of across the board, you know? Anyway, those of you that have questions or topics you'd like for me to cover on future podcasts, please reach out. Steve Sitkowski at gmail.com. And I'm in my Gmail account, obviously, every day. So hit me up. More and more, I'd like to make this about whatever it is that uh, all of you would like to have addressed. So, a little bit of my background. If you don't know me, I've been working with people and their money now for 4.5 decades. I've trained somewhere between 1.5 and 2 million people at this point. We've kind of lost count. And, I made the decision at the age of 19 that if I were ever going to have money, I needed to understand money. And so I began my journey and had sort of set myself up by the time I was in my mid 30s. And it's just been a whole lot of fun to take a bunch of other people with me. So I just really enjoy the sharing part and the teaching part of what I do. As a reminder, everything here is for educational purposes only. It is not intended as investment advice. And at the end, I will be sharing with you from our trade ideas of the week that my partner and I post every week to subscribers, our latest round of closed trades. So far, we have not closed out a losing trade this year. Trust me, it'll happen. We don't want it to happen, but there's a part of me where I almost wish that we had a losing trade because it would make all the numbers a bit more believable. And trust me, somebody who feels like there's no way that you haven't had a losing trade, I get it. I'd feel a little suspicious myself, but why would I lie to you? I have nothing to gain. I'm not selling anything here. And those of you that know me, my style is pretty straightforward. I'm a no BS guy, but yeah, so I'll show you the three closing trades from the most recent close trades. What's moving the markets? Well, the US and Iran, I think for this time it's real. We've struck a deal. Now, I saw kind of a funny post. Don't take this as political. I realize in today's world, when it comes to politics, everybody lines up on one side or the other. I don't. I just stand in the middle. I'm objective. I don't allow my emotions to override, my brain. But I saw a post that went something like President Trump, greatest military hero in history, has won the same war 14 different times, which, that comes from we were into this deal 5 days. The president said that the war was complete. Remember that? Well, clearly it wasn't. I'm sure he thought it was, or he thought he'd be able to put a deal together. Like I said, this isn't a political commentary. And then things would escalate. And then we have a deal and we don't. And then we have a ceasefire. And that night missiles are flying. This time, I think the evidence points to the fact that it's real. And specifically, I'm looking at oil prices. If it wasn't real, oil prices would not be coming down. So the market today was up significantly here. as of this recording. Now, people are going to be watching this at different times, on different days. But as of Monday at 1:13 Mountain Time, let's see where we're at. Um, yeah, and it says Trump signs Iran deal memorandum. So this takes a second to boot up. It will in a minute. Earlier today, I know the NASDAQ was up about 3%, which, a week ago, Friday, it was down 4, so it kind of takes care of that. So where are we at now? The Dow is up about 600 points. S&P 1.72, NASDAQ up 2.90. So the market can just go ahead and close as far as I'm concerned for the rest of the day. If we hold on to these gains, fantabulous. Markets are sharply higher across the board for all of the indices. So this benefits the markets in so many different ways. It points to lower inflation, lower oil costs, lower interest rates. All of that is great for business in America. SpaceX shares have moved higher. So on the last podcast, I made a prediction, and it's going to take 3 to 6 months to see if it comes true. And this is all anecdotal on my point, but I said there's so much pent-up demand for this stock when it goes public. And it's purely based on hype, on the publicity. That's not to say that SpaceX isn't an amazing company and in the future will do amazing things. But based on conventional metrics, the stock ought to be trading for about probably a third of its current price. And I'll give you something as evidence to support that during this podcast. I hope it is wildly successful. I'm like everybody else. Man, I love the idea of space. I don't personally want to go there. I want to watch other people go there. I'm an old Trekkie fan. I watch reruns of Star Trek The Next Generation. Who isn't enamored with space and what's out there? But here's my prediction. I said you have all this pent up demand. Stock will shoot up right after trading. And then I believe that over the next 3 to 6 months, you'll start to see some selling off, some profit taking, and people getting just generally more realistic about the numbers. And God forbid what happens when the next time we have an incident. I hope it is unmanned, but it wouldn't be the first time we've seen a rocket not make it to where we're supposed to go. Then what happens? Right? Then all of a sudden, I think people get a dose of reality. I hope that never occurs. But it has certainly repeated itself over and over again, since little boys tried to put together their own, missiles in their backyard and blew them up. So we'll see what happens. And this is a prediction I hope I'm totally wrong on. But for me, I'm going to wait until there is a pullback. And then I'd like to be an investor. If nothing else, it'll sort of force me to keep up with what's happening just in that industry and certainly with that company. 10-year Treasury is lower, 4.457. So I will repeat something that I've said before. It's worth noting. There are three interest rates based on current economics relative to the 10-year that you should be aware of: 4%, 4.5%, and 5%. Below 4%, the stock market gets giddy. Stock market loves low interest rates. 4 to 4.5, kind of a Goldilocks area. Go above 4.5, market tends to get a little grumbly. And we were above 4.5, and the market got grumbly. Above 5%, I think the market falls 10%, where we've come back down below 4.5, not by a lot, but we are below 4.5, which is a good thing. And oil prices. This is what makes me think this deal is for real, at least for now. We haven't seen oil at $80 a barrel since the war broke out. Now, before the war broke out, we're at 62. It is kind of amazing to me. It seems like our big goal relative to our relationship with Iran is that it reverts back to where it was before the war started. I mean, think about it. What do we want? Strait of Hormuz open. Okay, it was open before. We want oil flowing and energy prices coming down to where they were before. So, was there a net win in all of this? I'll leave that to people that know more about it than I do. But from a layperson looking at this, I feel like, it's kind of like somebody trying to get back together with an old flame. But that's just me. What the hell do I know about that? Market breadth for last week. So, a couple things that I tend to focus on, advancers versus decliners. So, on the New York Stock Exchange, 1,964 stocks went up compared to 872 that went down. That's great. On the New York Stock Exchange, how many stocks hit new 52-week highs? 266. How many hit new 52-week lows? 197. Pretty strong. On the NASDAQ, 3,205 stocks went higher, 1,976 went lower, 556 hit new highs, 511 hit new lows. If you remember last week, it was reversed. Almost 2-to-1 new lows versus new highs. All of that spells out good news, great momentum for the market. So things are always subject to change, but as I like to say, I'll take it. And the winners are from last week. Um, we've got Mosaic was up 7.5%, Albemarle about the same, Seagate, one of our closed trades was on Seagate, 7.25%, Intel, Western Digital, Coherent, Teradyne, KLAC, SanDisk, and Charter. So they were up anywhere from, call it 5% to 7.5%. Good week for all those stocks. So this is last week's heat map. And we could say this every week. There were winners and losers. But here's what I tend to gravitate toward with my eyes. I start off with, okay, so green means the stock was up on the week, red down. We have more green or red. Decidedly more green. Okay. Well, market breadth was sort of evidence of that. And then the next thing I look for are the bright colors, because those are big moves. So there were some big moves to the downside. Meta, 4%, App 11, 10%, Oracle. So now all of a sudden, software is getting smacked around again after trying to mount a comeback. Down 14%, Microsoft 6%, Palantir 5.5%, Apple 5.25%. But, there were some really nice winners. AMD up almost 10%, Intel 25, Micron up 13, Lam Research, we closed a trade out on that recently, up 20. So all in all, a nice week. So we have the new chairman, Kevin Warsh, who was a Trump appointee coming in. Jerome Powell completed his term. I really liked the guy. It's one of those things. When you talk about a Fed chair, there's no win. Some people are going to love you, some people are going to hate you. And the deal is that, if you're not lowering interest rates and keeping inflation down and having a robust economy, then you are evil villain number one, but it's impossible to do all those things at the same time. Something's got to give. There's a balance there. But so Trump has selected somebody I believe he believes will be more dovish as it relates to interest rates. The only reason I believe that is because he complained incessantly about the fact that Powell didn't lower interest rates. Well, Warsh's hands are tied. He's taken on an economy that's got all kind of inflation due to higher oil prices. So, um, but what I wanted to share with you is that generally the first 3 months when you have a new Fed chair, the market doesn't do well. On average, during those 3 months, it's down 12%. And it's there isn't one of them where it was positive. Now, given the fact we've just hopefully ended this war, might that be a catalyst along with what's supposed to be really strong earnings? Hmm, maybe we break the trend. But I'll tell you what, I always give a lot of weight to what's happened because other traders and investors are going to be looking at this if they're smart. All right, now we're going to get into a topic in which I am not an expert. I'm not a computer guy. It's good to get to an age where you know what you don't know, because there's a whole bunch of people out there who think they know a hell of a lot more than they do. But when you talk about AI, first of all of the rumors about what AI could become, they're basically at our doorstep right now. And so there are three main areas for an investor to focus. Over on the left-hand side, chips, memory, and photonics. So photonics is how data gets transferred. Okay. So, and then you have the various cycles for each. So in 2023, for chips, it was ignition, then ramps and explosive growth, which we've been experiencing. And look at the price on some of those stocks, right? We're going to go through names in each of these areas, and then mature bull market and sustained bull market. That's kind of where we are on the chip side. I don't see anything that is going to stop that. Not near term. These companies have a backlog. On the memory side, recovery, tightness, super cycle starting, prolonged super cycle. So memory is now off and running. Photonics, foundational and pilot programs, early acceleration, commercial ramp up. That's kind of where we are right now. And then we're going to move into mass adoption and core infrastructure. Very exciting. So what does that mean to an investor? So here are some of the key players. You might want to take a picture of this. I don't know. So under core processors and chips, NVIDIA. Um, NVIDIA has been so unbelievably good to me. And I believe will be moving forward. If you don't have NVIDIA in your portfolio, right, just wait for the next pullback and jump on that. AMD, Advanced Micro Devices, and Intel. Intel was the old tech grandpa. In other words, Intel used to be me. And then they sort of reinvented themselves. And boy, their stock, and I'm happy to say I was in on that, done very, very well. On the memory side, SK Hynix, that's a name probably a lot of you have never heard of, but they're kind of the leader. Then Samsung, believe it or not, followed by Micron Technology. So I've owned Micron. I didn't know anything about SK Hynix and never really thought much about Samsung, to be honest. That's my bad. On the server hardware and systems integration, you have Supermicro Computer, Dell, and Hewlett Packard. Hewlett Packard was left for dead. Not anymore. Then on network switches and equipment, Arista and Cisco. Then foundry packaging and testing, Taiwan Semiconductor, Amkor, and ASE. On substrates and PCBs, I don't know what either of those are, but it's TTM. I don't own it. And iBiden, I don't own that either, as evidenced by the fact that I don't know what they are. Come across optical communications, Marvell. I'm looking to see how many of these we've taken trades on. We've taken them on Marvell, we've taken them on Broadcom. I don't think on Maxi Linear. We've taken them on Credo. We've not taken them on Maycom. Coherent, we've taken them on Coherent and on Lumentum. Then you get down into optical modules. Now we're way over my head, but we've got FN, Fabrinet, Coherent, Lumentum. One where we have taken trades, right to the left of that, Corning. What does Corning make? Glass. What do you need for optical fiber? Glass, right? You think Corning, some of you think Corningware. Remember what our parents used to store leftovers in? On the semiconductor equipment side, ASML, Lam Research. I actually, in my previous residence, on a single trade on Lam Research, built out my entire back then man cave. I don't have a man cave now because apparently I'm no longer a man. Applied Materials, we've done a ton of trades on that. Same with KLAC. So these are the key players. Make a note of these, and from time to time, plug them into a chart. When they're bullish and then you get a pullback, that's your time to strike. So it's all about AI. So this is the number of S&P 500 earnings calls citing AI over the last 10 years, right? As a big part of their business or their future business. It's gone from a handful of companies 10 years ago to 65% of all the companies in the S&P 500. I'm telling you, if I had a son or daughter coming out of college or going into college, I'd tell them you got one of two choices. Learn a trade where AI can't replace you, or become an AI expert, one or the other, or you're going to get phased out due to obsolescence. That's how I see the future coming down the pike. Chip stocks, they're starting to look a little pricey to me. So is there money in semiconductors? Of course. But if there's one thing I have learned, everything runs in cycles. The New York Knicks just won a championship. They hadn't won a championship in over 50 years. Used to be it was the Lakers and Boston every year. They kind of traded off. Well, now where are those two? I think Boston's got a chance to come back if they get healthy, but that's a different conversation. But my experience with virtually everything in life is that it runs in cycles. So semiconductors are up 163% since 2025. So for the next 1.5 years, they're going to go up another 163%? No. S&P is up 26%. during that same period of time. So be careful. One of the mistakes that I watch people make regularly, they get into stuff late. After something's already made the big move, then finally they become a late adapter. And then when it rolls over, they wonder what they did wrong. Be aware of overpriced stocks. Learn how to read a chart, by the way. Maybe I'll do a podcast on technical analysis, which will help you to recognize when a stock is likely overvalued, right? Gets too far away from its 50-day moving average. RSI is above 70. We can do a little lesson on that at some point. If you're interested, shoot me an email. Will the hype be sustainable? Has there been some hype about SpaceX? More than any other stock I've ever known. That doesn't mean it's not a good company, but this is price of the stock by sales. So this company is selling for 112 times their revenue. NVIDIA, 19.8 times. So would somebody like to explain to me how SpaceX, which is not proven, on a per sale basis is 5 times more valuable than NVIDIA? Tell you what, if I were banking my future on one of those, I know which one I would pick. So what happens in the markets is that things tend to move ahead of themselves until they cool. This is true for stocks going up or stocks going down. Once they cool, then we go back to, okay, what do the numbers look like? What does the future look like? What kind of contingencies should I be calculating in, right? By the way, that same sort of percentage would be true comparing SpaceX to Apple. I think SpaceX is 19 times more valuable than Apple based on a revenue ratio. You think SpaceX is 19 times better than Apple? This company has been around forever, has all this recurring revenue. That doesn't seem likely to me. Good to be an American. So this is household wealth. It's risen at a spectacular rate in the 2020s. And that includes COVID. Where has most of that wealth been created from here to here? In the stock market, right? From here to here, that's real estate. And I've said this for years, middle class people make money in real estate, which is great. Wealthy people have their money in the stock market. Why? Because the stock market's a better investment. That's why. Real estate goes up on average, if you look historically, about 5% per year. Stock market, 10%. Getting in and out of real estate costs you a fortune. Getting in and out of stocks is free. If I wanted to sell my house, I would expect it to probably take, because of the price point, 6 months. I could sell $2 million worth of a stock in less than a second. That's how rich people get rich, right? They recognize differences like that. But the good news is people have done really well. Somebody could make the argument, well, it's mostly the rich people that got richer. Okay, so here's my advice to everybody else. Learn what the rich people are doing and go do some of that. Develop those habits, right? There are some simple differences on average between wealthy people and broke people. You want a real simple one? Here's a real simple one. Rich people read a lot of books. Broke people watch a lot of television. Do you know how Warren Buffett spent 80% of his time every business day reading? It's how you get smart. right? The only problem with books, in the words of Nate Bargatze, they just have so many words. That'll be lost on you if you don't know who Nate Bargatze is. Fantastic comedian. He's just great, you know. Rich people tend to work out. Not all of them, but they tend to work out. They look at them on TV. Generally, they're fit. Broke people, not so much, right? So start asking yourself, what are the wealthy people doing? How are they living their lives? Study them. Success leaves clues. Don't hate them for the sake of hating them. By the way, to me, the greatest thing about SpaceX going public, the headline was that Elon Musk is now a trillionaire. And of course, some people are going to hate him for that. I applaud the guy. People that hate him for it, they weren't there when he started. They didn't take the risk that he took. But now that he's made it, right, they want to vilify him. But do you know that he made 4,400 millionaires? So for the haters, I would ask them, how many millionaires have you made? The people that say, oh, the billionaires should be doing more to help people. He helped 4,400 people become millionaires. What the hell else do you want him to do? And by the way, that number will continue to move higher. And he will start other businesses and make more people wealthy. Just the other side of the argument. Consumer sentiment rises in June. So this was before the end of the war. People were actually starting to feel better about the future. Love that. It's still not at the levels it was, but it's a lot better than when we were where we were in May. Market sentiment, which is something I check in on regularly. The problem is that we're looking at this in arrears. So today is June 15th, and this was June 10th. I suspect next week it'll look a lot different, but this gets done by independent investors, and they ask them once a week, what do you think the market's going to do over the next 6 months? Typical week, 37.5% say go higher. On the 10th, it was only 30%. On a typical week, 31% say it'll go lower. On the 10th, it was 47%. So pretty bearish. Now, this is more current and kind of came as a surprise to me. This gets done daily. On the fear greed index, which goes from 0 to 100, 100 being euphoria, 0 being absolute despair, we're at 42. So we're at the high end of fear, kind of creeping into neutral. I thought for sure, given this announcement, and maybe tomorrow it'll look different, that we would have moved into at least neutral territory. All right, future of interest rate. So this is the CME FedWatch tool based on futures contracts. They try to predict where rates are going. Why do we care? Because the stock market likes low interest rates. That's why we care. So the next Fed announcement, so Chairman Warsh, freshly minted, will be conducting that. There's a 98.6% probability that there will be no change. In July, a 92% probability, no change. September, 73% no change. October, 64% no change. But in December, as of right now, this probability has gone down a little bit, but there is 56% probability that we'll get a rate hike. How will the market respond? I don't know. It won't be favorable, but it's not going to collapse. I think that could cause us 2 to 3 percentage points. Is it possible if we get oil prices down quickly enough And given the fact that Warsh is a Trump appointee, um, might we be able to hold the line for a while? Longer than this? I think there's a decent chance. Kind of 50-50, which is about where the odds are right now. Sector performance, S&P 500 is up 10.49%. We're not even halfway through the year. Energy sits at the top of the heap, but it's an outlier because that was due to what was happening with, obviously, oil prices because of the war. But right beneath it, technology, AI, the stuff I just got done talking to you about, is up 21% in less than half a year. Industrials and materials, which are benefiting from AI data center construction, up about 15% each. And I've told you for the last several weeks that I think there's a conservative opportunity in financials. You don't want to go run and put all your money in there, but we've got relatively low multiples, decent dividends, and it's certainly lagging the S&P. And again, remember the cyclical nature of things. Perfect case in point. So, what do we have coming out this week that we should be keeping an eye on? So, today we had the Empire State Manufacturing Survey. That came in super light. Last month it was 19.6, which was a huge beat. This time it was 5.7, huge miss. So Empire State Manufacturing is manufacturing in New York. Why that was down so precipitously, I am not sure. What else am I keeping an eye on? Nothing else from today, nothing from Tuesday. I'm interested in retail sales. Sort of tells you about the strength of the consumer. So I keep an eye on that pretty carefully. And then you have the Fed announcement. Even though the Fed's not going to do anything with interest rates, they will be commenting about the state of the economy, where they see the risks in the economy. And sometimes they sort of tip their hand as to what's going to happen with the future of interest rates. And they'll tell you that, we had this many members that were in agreement with holding rates. This number wanted to lower interest rates. This number wanted to raise them. So it's the press conference that follows the announcement, which is interesting. So the announcement comes out at 2:00 Eastern. So the press conference, 30 minutes after that. On Thursday, I'll be watching the weekly jobless claims number, which, by the way, has been trending up the last 3 weeks. So that's worth keeping an eye on. And then we get our leading economic indicators for May coming out on Thursday, and then nothing on Friday. So that's what I'll be watching. How about you? Take a look at the charts. So I want to check in for you with the S&P 500. Let's start there. So we have not gotten back to previous all-time highs, but we are way out of the woods. So I pointed out to you last week that the market was rolling over. You remember what I said about this? The key thing to watch, would this 50-day moving average hold? And it did. Now, did it get a boost up with the announcement? Obviously, right? But the state of oil was what caused the price to roll over. So it's definitely a sword that cuts both ways. What does the intraday chart look like on this? So moved up, and it has sort of held its ground all day. I've been waiting for a big pullback potentially. Hasn't happened. So that is spectacular news. And let me check in with the VIX. So this is the volatility index, also known as the fear index of the S&P 500. And generally, when the market goes up, the VIX comes down. Well, the market was up today and the VIX was down about 9%. So we're now sitting at 16. The VIX very recently was up to 23. Once we get above 25, there's a whole lot of fear. So we didn't cross that threshold. But look, we're down to the lower end of this range. Terrific. People are feeling pretty good about things. By the way, if you've ever sat through one of my classes, I talk about double tops and how they are decidedly bearish. You see the letter M. If you've been in one of my classes, I've had you write this note. M stands for murder. It's exactly what happened here. Okay, let's check in on our closed trades. Again, if you've got topics for me to cover, questions you'd like me to address, hit me up, stevesitkowski@gmail.com. So these are three closed trades. Seagate Technology, we were in that trade for 10 days. Our profit, 23.5%. Western Digital, we were in there for 10 days. Profit, 20.6%. And all this happened prior to the deal with Iran, right? So these were closed out on the 12th. And on Lam Research, in at 9 days, profit of 17%. Would it be fair to say that there's nothing happening in your account that looks anything like this? Now, these are option trades. So if you're not familiar with options, you might want to send me an email about one of our introductory classes on options. But if you do trade options and you know how to put on spread trades, you ought to go check out tradeideasoftheweek.com, right? And it'll tell you all about this service. It's just kind of a month to month. So go check it out and test it out. The people that are in it are absolutely loving it. Well, it's really nice to come to you with a bunch of upbeat news. I always like that. Next week, it'll be another week. Hopefully, we keep the ball rolling, but whatever it is, I'll be here to let you know and to tell you some of the things that you might want to be thinking about to capitalize. All right. Great session. I will see you next week. Thank you for watching. So until then, be safe, be blessed. Bye.